Good morning. Welcome to the TreasuryONE video update. With me today is Andre Cilliers, currency strategist, TreasuryONE once again. So Andre, we've seen the rand do some interesting moves while other emerging markets weakened. We saw the rand strengthen. There's a lot of market speculation that's on the back of the win that Cyril Ramaphosa had in the NEC to say that all government officials that's got charges against them must step down. So probably they've got 30 days now to make a choice about Ysmagashule, and that's probably what the market commentator says helped the rand stronger yesterday. But what we've seen in the last few days is the rand generally trades stable during the day, during London time, during South African time, and then when the Americans come in, the rand sort of strengthens. So they probably searching for yields. What do you want to add? What do you see in the markets that complements that we're currently seeing in the scene?
Well, good morning. Yes, we're seeing a very, very resilient rand in the face of a stronger dollar. And I don't want to focus really this morning on the normal stuff because that's still prevalent. COVID-19 infections, America coming out of that a lot better than Europe. Read an article again against this morning about France and possible further lockdowns and how high the infection rate is. So that still plays havoc. In the meantime, people seeking yield, as you mentioned, and that's why emerging markets is doing well. But we've also seen some problems out of Turkey. We've seen some problems out of Brasilia. And so there is problems in some of the emerging markets. And so why is the rand so resilient then? Well, I think it's just a sign of a very, very weak economy. If we see and look at the credit extension figures that came out yesterday, lower again, and that just underlines absolutely no demand in South Africa. People are not going out there spending, and as long as there's rumors about third waves and possible third waves and more lockdowns and a ban on liquor sales and all these things, and I read this morning that even Remgro it said that they're okay and they would actually recommend stronger lockdowns during the Easter period to avoid a third wave. As long as that all happens, people will not spend. And as long as we do not spend and we do not go into capital expansion in terms of factories and manufacturing and so forth, there's no demand, whilst the export side is still reasonably well. So surplus dollars, lack of demand for dollars, and hence the rand's doing well, and interest rates and still at the relatively high side compared to the rest of the world. So yeah, that's exactly the name of the game, and as long as that's prevailing, we will see the benefit. But it will run out at some point in time, and I think things are getting a little bit overstretched at this point in time. So on an importer side, I would really start looking at levels below 15 to take my short-term cover, because as long as the dollar remains on the front foot, and I think that will continue, my interpretation of graphs is that we could very well go below the 117 into the 116 levels, and that will definitely pull back and show some effect on the rand, and I think we will trade above 15. So exporters, unfortunately, in the very, very short term, if you need your money, then you have to use these rates. But in terms of forward cover, I would wait above 15 and then make use of forward points as well and take some forward cover. I'm still in the 1520, 1530 range where forward cover should be taken with the forward points. But that's what's happening. No demand, and interest rates still attracting some investments into the emerging markets.
Thank you so much for that quick update. So yeah, out there, the longer term ranges of 1450 to 1550 is still would be trading at the moment. Importers, let's make use of those levels. Exporters, let's just hold off a little bit. Thanks, Andre, for your time.
Thank you.